Welcome to Market Briefs. Here's your daily market summary for May 20th, 2026. Stocks ripped higher today as oil collapsed on Iran de-escalation news, dragging Treasury yields down and giving equities a clean runway to rally. The S&P 500 climbed over 1% to 7,433. The Nasdaq did better than that, up 1 2/3% to 29,298. And the volatility index dropped over 3% to 17.5. Underneath the surface, you saw classic risk-on leadership. Semiconductors, biotech, airlines, home builders, cruise lines, and even small modular nuclear stocks all rallied hard. Energy stocks like Exxon and Target were the day's biggest losers. This was really the move of the day. West Texas crude fell nearly 5% to just over $99 a barrel. Brent crude fell over 5% to $105. The driver, President Trump, signaled that talks with Iran are in their final stages and called off a planned military strike. Markets read that as the Strait of Hormuz blockade unwinding, and the Iran risk premium got priced out fast. But here's the catch. Even with both crudes falling, the gap between Brent and West Texas widened to almost $12 a barrel, a 64% expansion in a single day. That's saying physical oil markets outside the United States remain meaningfully tighter than American markets. The Hormuz disruption is only partly unwound. Expect continued pressure in jet fuel, diesel, heating oil, and agricultural fertilizer prices abroad. When oil falls, inflation expectations fall, and bond yields follow. The 2-year Treasury yield dropped 1.5%. The 10-year dropped almost 2%, and German bonds did even better, down over 3%. European bonds outperform because Europe imports more energy, so the oil unwind is more bullish for them than for us. Now here's something unusual. Even with real interest rates rising and the broad dollar firming, gold rallied 1 1/3% to $4,544 an ounce. Silver did even better, up almost 3% past $75. Normally, rising real rates would hold these metals down. The fact that they ignored that signal tells you the bid is structural. Central banks accumulating, and uncertainty around the Fed chair transition as Kevin Warsh takes over from Jerome Powell. Copper rose 2% in sympathy, which says industrial demand is still firm. Core inflation, the Fed's preferred gauge, ticked up 0.2 percentage points to 3.2% year over year. That's the third straight month of acceleration. The Fed funds rate is sitting at 3.64%, which gives a real interest rate of just 0.4%. That number is barely positive and shrinking fast. In plain English, even though the Fed isn't cutting rates, inflation is rising faster than rates are. That's what economists call stealth easing. If next month's inflation print does the same thing, real rates flip negative, and that historically means hard assets like gold and Bitcoin should be working harder. Bitcoin closed at $77,670, up just over 1%. But the bigger story is the relative performance question against gold. Bitcoin divided by gold sits below its 21-week moving average by about 2.33%. That means gold is still winning the relative race for hard asset flows, even though the macro backdrop says Bitcoin should be working. The on-chain numbers tell the same story. Spot Bitcoin ETFs saw 3 straight days of net outflows, and about 13,600 Bitcoin flowed onto exchanges this past week. Supply pressure, not absorption. Until that flow reverses, Bitcoin probably keeps grinding sideways even with a friendly macro setup. Within stocks, the rotation today was active and real, not just thin volume markup. Astera Labs ripped 17.5%, Guardant Health jumped 17%, biotech name Roivant rose almost 15%. United Airlines and Delta both up around 10% on falling fuel costs. Toll Brothers, the home builder, rallied almost 10% on lower mortgage rates. On the downside, Hasbro got hit nearly 9% on earnings. Target lost almost 4%, and software names like Nutanix and Intuit got distributed on heavy volume. The familiar 2026 theme keeps playing out. Money rotating into AI-driven hardware names and out of traditional software. The Federal Open Market Committee minutes hit at 6 o'clock Eastern this evening. That's the conversation transcript from the last Fed meeting, and will tell us whether policymakers were already discussing rate cuts or just holding the line. Beyond that, the next big calendar item is the June 16th and 17th Federal Reserve meeting, the first one likely chaired by Kevin Warsh, with a fresh dot plot. That's the single most important event between now and mid-June. That's your Market Briefs daily summary. Like and subscribe for tomorrow's update. And remember, this content is for informational purposes only and is not financial advice.